Okay, weekly forecast for the week commencing Sunday, 7th of November 2021. Just going to run through very quickly the few pairs that I've been watching. Some of them you may have on your list, some of them you may not. But I'm just going to give you the overall insight and forecast as to how I've projected the initial moves thus far and what we're kind of anticipating for the week ahead. Now, as I've mentioned before, there always is more determination and reliance upon the higher time frame structure, because this is what the banks, the market makers, the composite man, whatever you want to call it, the guy with the most money in the world is the one who is making the moves based upon higher time frame structure. So what we want to try and do is effectively, as we've said before, work on a top-down analysis and structure. And I've kind of tended now this week and past week to rely upon the weekly structure to determine exactly what the market's going to do for the week ahead. So what we would want to do is, if we just use DXY, I haven't done a full in-depth analysis on this, but I've left my analysis on here from a few weeks ago. And as we can see, the projections that we've had have played out where the market's come down, tested an initial zone, and it's kind of rejecting off that zone now, continuing a bullish bias. What we can see on the weekly time frame is we are effectively now on a complex pullback. We had bearish bias confirmed and a continuation was placed in October. It's now retraced into the supply area for that breaker structure and continuation to the downside. We're now seeing rejection from this zone. So the initial anticipation is that we would want to see how the following week plays out, whether this rejection that's occurred the past week, which has mitigated slightly deeper into the supply area, is respected, or it's used to basically break through this zone and continue bullish. So the initial estimation at the moment is that we are looking for bearish continuation from this supply zone. However, we will wait to see what the market defines and tells us in the coming week as the market opens and into Monday, to see how this wick on the weekly gets tested. And then when you go down onto the daily, you'd want to see how the last candle that closed bearish, whether it comes back up, tests this wick again to a certain degree, and then starts to reject. If it does so, we may well be looking at a fully bearish week for the entire week. So again, optimum and prime entries for DXY correlation on pairs would be to wait and see how it reacts to this wick. When you start getting rejection, what you want to try and do is enter your trade as close as you can to the open of the candle before it starts moving away from the zone of rejection, because that's going to be your optimum entry. Once it starts moving away, you're going to be more and more in risk. The SL is going to be longer and deeper, and you don't want to expose yourself to that much risk. That's the SY. We'll jump onto EU. So EU on the weekly time frame, we are bearish, and we've continued bearish for a long time. We can see the continuation and breaking of structure has been reconfirmed by taking a major structural point just the past few weeks. It's now consolidating in that area. It seems to now be testing an area of inefficiency on the weekly to consolidate and determine whether it wants to now reverse from this point or continue bearish. We've got a few structural points on the higher time frame that are important to us. We're looking for demand candles below and demand areas below, which also line up with weekly demand levels that I've marked up with rays for yourself. The beauty of this is that you want to actually see where the market touches into these areas and whether they correlate with a lower time frame supply or demand zone. This will give you an additional confirmation that a trade could possibly be taken from this type of an area. And even if you use this entire zone to determine your stop, yes, fine, it's 50 pips, but the upside is we're looking for this to occur, and even on that basis it's still a 1 to 19. But what you'd want to do is wait for the market to tap into this zone, get your rejection confirmation on the lower time frame, change of structure, and then take the trade on a refined stop loss somewhere to obviously increase your RR. So where we're looking at weekly zones to be tapped is we've got demand candles down here, which could possibly be continuation of the move into this rejection, confirmation of the move to the upside, and then changing up the other way. We have got also, because we're sitting in the middle of a range right now, a supply candle above us as well with liquidity above it, which could possibly be an area that the market also targets. So same thing as with the DXY, we want to see how the market opens this week, whether this candle is respected. So on the daily, we want to see whether the supply candle that we've currently formed in the middle of the week is actually respected, and we get continuation of rejection from here. It seems as though the market now will open slightly bullish. We want to try and see whether we get this level tested and then a rejection to the downside, which will confirm a bearish week, hopefully for EU to continue on the downside. If it breaks this zone and continues to the upside, we'd then be looking for it to target the higher level liquidity and possibly even tap into this supply candle and even possibly target these equal highs to then determine whether it now has a complex pullback before it goes bearish. So again, here there's no real confirmation on what we would be expecting. We want the market to tell us how it opens in the week, and then we will trade once we get our confirmation of direction. EJ, again, we'll start on the weekly. So we are clearly bearish on EJ at the moment from the point that it created the higher point here. It tested a supply candle, which is a weekly supply. It's tapped into that area. And when I say that the higher time frame zones are very, very important, if you can see how the supply candle on the week was respected by this move, where we had rejection and break of structure to the downside being formulated, and look at where it formulated from. January 2018 was respected in May 2021, and you can't get more sniper than this. So this is where the supply candle was respected, clear rejection, and it has been bearish ever since. So this is one thing that I've kind of picked up on the past week. And even if we took this down to the daily time frame, you can see that you have literally, forget pip perfect, tick perfect entries. So it's literally touched to the zone and it started to reject off that point. And this is now the type of trades that I'm trying to target. We have confirmation and continuation of the bearish move from that point where the supply candle was not tested fully. It's tapped the zone, rejected completely off it, left behind equal lows. Now it's come back up, tested the supply candle that was left behind from that zone, and has now continued bearish. So our anticipation for EU EJ is bearish. We're now going to wait to see how the week opens. We've got a bearish candle continuation forming at the moment. It's probably going to target these equal lows before it shows us some form of a rejection. That rejection to the upside may well be a tap into this supply candle to then continue the move to the downside. So we just want to see how the day opens up and what happens London Open in terms of forming of this candle. If it tests the wick to the downside and then starts to reverse in London, we may well expect a short-term buy in the week to then sell down, or this may be a continuation sell to take out equal lows and then continue to the downside and target lower level of liquidity, even reaching down to these areas of equal lows down here. GU, again, we'll start on the higher time frame weekly chart. Very similar to EU, we have rejection from the upside where we had supply candles and wicks formed. Those zones have been respected, supply candles have been respected, levels have not been broken. So overall, we're still bearish. When we zoom into the closer time frame here in terms of this year, we can see that the bearish structure is continuing. There's a slight liquidation of highs here, which is only a deeper mitigation to the supply candle zone, which then continued the move to the downside. We have had confirmation of breaker structure continually, for highs have been respected also continually, leaving behind supply zones. So what we're now looking for is the large week that we've had this past week of a bearish momentum was a clear rejection of this indecision candle. And we want to see how the week opens. It's currently sitting in a 4-hour demand, which is holding itself up. There's also a higher level demand on the weekly here, which is also a possible factor of holding the market up. We want to see whether the week opens bearish to continue this move into the demand, to then push itself up and then form itself with additional volume down to the sell side. This supply candle indecision could also be tested. It has been closely mitigated at the moment, but it hasn't closed the gap. There's a tight imbalance here that could possibly be tested for additional volume and push to the downside. When you go down to the daily, you can see that a supply candle has been introduced into the market here. And all this really means is that this was introduced as volume to create the large push that we had tail end of the week, but it also acts as additional liquidity for us to use as a springboard to then come back up into this area and then sell out of it deeper. And wherever you see additional moves being made and the market is struggling to continue down, you'll see a supply candle introduced. It effectively is a different colored candle between two of the same. So this could be a supply candle which confirms move to the downside. A demand candle confirms move to the upside, which is this here. This is a demand candle between two supply candles. So what we're looking for here is, again, rejection of this wick, either to the 50% or from this zone entirely, and then continuation to the upside, possibly through into the middle of the week, and then clear rejection to the downside thereafter. This could be a zone that is targeted, or on the weekly we have this wick marked up. We also have a lower time frame daily candle here marked up in the middle of this candle, which could be used to basically target. The market has moved aggressively this week. It probably won't reach all the way back up here in 1 week because of the volume that it's moved within. Therefore, our sights are actually set on the lower supply area to be tapped to then continue for sales to the downside. GJ, very similar. We basically are now currently in a bullish momentum on GJ because it's lagging behind GU, where GU is already basically printed bearish. GJ currently is still playing around with a bullish bias at the moment. Liquidation of highs is slightly further back in terms of getting into the supply candle for the daily wick that's been tested up above, and it is now showing signs of rejection to the upside by tapping into that daily wick and then pulling itself bearish. What we'll be looking for in the week is how the market opens and whether it continues its sell to the downside. Testing this demand zone would be a very important factor for us. It may need to basically break this zone to continue sells to the downside and confirm this bias that's being printed at the moment. However, there are equal lows lying here, which effectively are a magnetic draw to the market. This will actually pull the market towards itself, and we are anticipating in some way, shape or form for the market on the lower time frame to come hit this demand zone, come back up, reject from the supply candle it's left behind, and then target equal lows that are left behind here to then continue sells to the downside. AU, a similar story to the other XXX USD pairs. So we are in a bearish bias. We have been, and we kind of projected this from the beginning of October, where we've had rejection from the supply zones that were actually in place at that time. Again, very similar type of setup. On the weekly, we are already rejecting from this supply candle, and the market has continued to break structure on the lower time frame. Rejected this higher area here. This is the protected high at the moment in terms of these two supply zones. We don't see them being tested in the near future. So the market has already told us it's rejecting from this area and it's moved away. On the lower time frame, we obviously have supply candles being introduced to create the momentum move to the downside. That also leads to lower time frame break of structure. I will just on this chart take you down to the 4 hour and show you exactly what happened. So effectively rejection occurred from this point. We've obviously had break of structure to the downside. Here, supply candle introduced into the market before the market broke structure on a major structural point, retraced back, respected the supply candle and continued sells. So a beautiful trade here. 3rd of November, we could have been in on trade and we'd hold this trade for sells for the long term. This is textbook SMC setup, but obviously on the higher time frame, you wouldn't see this happen. You'd see it in a very different way, where we've just had literally break of structure, retest of that area, and then continuation of the move. Here again, because this is now an indecision candle that's been printed last week, tail end of Friday, we're now waiting to see whether this market actually has covered itself in terms of higher time frame zones being respected. We can see the supply candle that was introduced into the market on Thursday of last week was actually filled on Wednesday was filled on Friday, and it effectively is pit perfect. So price may have well made itself efficient between these two wicks. There's now no need for price to continue up in this direction. It's covered itself. So what we're hoping to see when market opens is Asia through to London is to see this wick get tested. We probably don't want to see it breaking this line, which is why the line is there on my chart. Get 50% or deeper mitigation of this wick and continuation of sells to the downside. The market's already broken structure, as we can see here. It's shown as bearish bias. It's being held up by a 4 hour demand that we've got marked up here, but the 4 hour demand is not strong enough to hold up a daily chart on the bearish bias that it's creating. So what we want to see is how the market comes up into this wick during Asia and London, and then we want to see rejection to the downside on this chart for the remainder of the week, possibly coming down to test a demand zone down here. AJ, similar setup to EJ, where obviously the cross on this is obviously lagging behind the major. However, there is a reason for it. It's very similar. We've got a daily demand that's been tapped and mitigated a couple of times, so it's been mitigated deeply now. That may well also be a reason for this daily demand to now, daily supply, sorry, to now not hold. We have momentum to the upside. It's rejected from this area. However, what we want to see is whether this 4-hour demand, very similar to AU, actually holds up and is a means for the market to push up through this supply that's been tested multiple times, or it just acts as a continuation for sells. What we see on the daily is obviously the market has consolidated in that area. It's rejected to the upside. It's showing that it doesn't want to push further up and break this supply. Therefore, the preferred bias at the moment now is bearish continuation. And what we're looking for it to do is to respect this supply candle that's been printed again Wednesday of last week. It comes back up in Asia, London, and then we get rejection from this area to then come down and test the higher time frame demand zones by the end of the week. We have got news on this as well, so we'll have to see exactly how that plays out. But the main anticipation that we want to try and look for is what is the market telling us at the end of the week to get us into a good entry position to be able to hold it for the remainder of the week and thereafter. And this is exactly what I'm trying to kind of now illustrate to you guys. NU, similar setup to AU. We have obviously been respecting a daily supply zone. The weekly chart also shows that the market's struggling to break above these levels that it's created on 3 consecutive weeks. The protected high has been marked because that, to me, now is the protected high where the market has started to reject. It's taken 50% of the previous wick and it started to reject to the downside. It's moving away from this area. So what we'd be anticipating is the market now respects this level and shows us a bias to sell. When we go down to the lower time frame on the daily, we can see that supply has been induced into the market continually. We'd want to see the next candle that opens in Asia and London to come up, test this wick, possibly test the supply above, respect the highs that have been created as a protected area, and then continue to sell. And what that will do is continually induce supply into the market to allow the momentum to continue to the downside. We have got equal lows down below, which are a fundamental aspect for the market to kind of draw itself down towards them. So our bias on NU is also bearish. NZD CAD, which is the cross that I use for NZD, a similar type of scenario. We're already bearish in this. Areas have been respected. Daily supplies have not been tested and left behind. The market's moved aggressively away from those zones. However, it has been held up by a weekly demand, which is delineated by this line across the bottom. We have got relative equal lows left behind. The market's kind of holding itself up here, which food for thought is showing us that the market is in indecision at the moment. This effectively could be a very clear accumulation or distribution. We want the market to show us which way it's going to go. Right now it's ranging between here and here. We want to see clear indication of it either taking a supply zone or breaking a demand zone to get an indication of where bias is going. Obviously, in terms of the cousin pair, AU is showing us that it wants to go bearish. So our bias will be more so towards the bearish side than NU as well, because they do move very similarly. Economically, obviously, it's in a different position in terms of the global pandemic and economical infrastructure and support, but we would still anticipate NU to be going bearish. On the daily, when we look at the chart, we can see the market has tested daily supply a number of times. It has rejected from this area. It hasn't been able to test it over a number of days, and therefore the bearish bias is confirmed to us by the move that we're kind of anticipating into next week, where we want to see Asia to come up, test the supply and the protected highs that have been left behind, and then show us confirmation of bearish intent to sell to the downside and target areas of liquidity that has been left behind. USD CAD on the weekly. This is ranging to me at the moment, even though we have Bullish intent, to be honest with you, on the lower time frame at the moment, it was reversing from an area that it kind of picked itself back up off. We have consolidation of lows across the bottom here, and at the moment the chart is not giving us many clear signs in regards to what it wants to do. It's ranging also at the moment. In respect of DXY, we are looking for DXY to possibly continue bullish with what it's kind of printed over the previous days, but because it's ranging itself, it's also causing UCAD to range as well. So we want to see exactly what happens with this. Be careful and worry when trading this. Just look at what's happening with the DXY because it directly correlates in any case. On the daily, what we'd want to see is the market is obviously testing a supply zone at the moment, and whether it kind of breaks that supply zone during this session open on Sunday into Monday will confirm to us whether we are now looking for bullish intent. So again, just look at the areas and supplies and candles, then just see what they're saying to you before you kind of take a trade on this. Don't enter this trade haphazardly, because at the moment it is consolidating, it's ranging. There's no telling which way it's going to go right now, but you'd want to kind of wait for confirmation of direction before then taking a confirmation on that trade. CJ, we are at the moment in a bullish complex pullback. However, the market is bearish overall. Highs have been respected that have been created previously. We have break of structure to the downside that's occurred interim. The market also is holding itself up here. However, we are looking for bearish continuation on this because the market has struggled to push up over the past couple of weeks, where it's kind of had this volume momentum push into the supply zone. The supply zone has rejected the candles down. It's left behind equal highs. The market hasn't targeted these equal highs when it could have with this large volume push in the beginning of October. It started to reject off that zone, and therefore we are now looking for bearish intent on this. On the lower time frame, we can see the market is consolidated, left behind equal highs, and it's currently testing a demand zone. We want to see how the market opens in the Asia session and into London tomorrow to see whether this demand is held up or the market is going to come and use the supply candle above to then create volume to push itself down into the higher time frame demand zone that is here below on the weekly. This is looking to sell, I think, in a very big way. I have been anticipating this since the beginning of October, and it seems to have been moving. Unfortunately, missed the trade up the top here and taken a few intraday trades, but this trade that come now and now materializes will probably be one that you want to hold for a good few weeks. So that is the forecast for the pairs that I have analyzed and watching for the week ahead. I'll stop the recording and then we can have a Q&A if you guys want.